So Bitcoin is crypto, but crypto is not Bitcoin. Today, we're going to be doing a short video explaining the differences between Bitcoin and crypto. And I got some visuals here. I've talked about this before at length, but I still think that there's a lot of people out there who have misconception around what Bitcoin is versus what crypto is, because they are very, very different. And I think the sooner that you can learn that and understand that, the better off you're going to be. As I'm going to explain here, I'm going to go through a couple different characteristics of each, comparing the two. And then I'm actually going to show you what the difference is of holding 100% Bitcoin versus like 50% Bitcoin over 20 years of compound returns within Bitcoin. So let's kick this off with proof of work. Look at this. That's a nice looking spreadsheet. So Bitcoin uses proof of work. Crypto uses proof of stake. And the main difference there is with proof of stake, that would be Ethereum, pretty much every cryptocurrency except Bitcoin. There are a couple, I think, that use proof of work, but for the most part, they use proof of stake. And Ethereum was actually proof of work before they decided to switch over to proof of stake. And since then, you can look at the returns of Bitcoin versus Ethereum. You can look at the day that they changed from, I encourage you to do this. Look at the date that they switched from proof of work to proof of stake, and look how much it's gone down since then. So clearly the market has decided that, hey, Ethereum had a little bit of value maybe when it was still using proof of work, but not anymore. And so proof of work essentially means that it doesn't really matter who owns how much Bitcoin. What matters is how many nodes are in the network. And each one of those nodes is essentially a vote saying, do we want to keep the existing time chain as it is, or existing code as it is today, or do we want to fork this thing and do something else? And the nodes in the network essentially vote for which option that they want to go to by running that software. So I don't want to get too far into it, but it's a very important, probably the main difference between Bitcoin and other cryptos is the proof of work versus proof of stake. Proof of stake, think of it it's very much like fiat, where if you had a bunch of tokens, let's say that you had 60% of the Ethereum tokens, that's your stake in the network, and therefore that's your votes in the network. So if they wanted to make some changes, which they have many times in the past before, they've changed the direction, they've changed the code of Ethereum, and that was essentially voted on by the people who held the most Ethereum. So how that differs is that it doesn't matter how much Bitcoin you have, it's all based on the amount of nodes. So the more Bitcoin you have, it doesn't give you more influence in the network. But if you run a node, you actually say in the direction of the future of Bitcoin. So that's a key difference there. Bitcoin was a fair launch. January 3rd, 2009, Satoshi mined the very first block, the Genesis block, and it was fairly done. He knew that at that time, he was the only person mining Bitcoin. And so he made that very first block unspendable. So the only way that anybody could have said that Bitcoin wasn't launched fairly was by saying that Satoshi was the only one, because they were testing it at that time. And Satoshi got 50 Bitcoin, but he made it unspendable at that point. So it was a truly fair launch, Bitcoin. There was no inside tokens given out to friends or family members or people who helped build Bitcoin. Every Bitcoin that has been mined since 2009 has been done so fairly. No asset in history has ever been done like that. And you compare that to crypto, where all these different cryptos have ICO, so initial coin offerings, where they basically say, we're going to lock up, or we're going to issue essentially 80% of the supply. We're going to give it to our friends, people who helped build this thing. And then we're going to dump the other 20% on the market for other fools to buy. So in that sense alone, fair launch versus ICO, that's essentially what made Bitcoin a commodity versus an unregistered security like the other cryptocurrencies out there. And that's important because even when we look at this one, so this one I should have put higher, but it's buy and sell. So in this case, people buy Bitcoin or they mine Bitcoin and they hold it for the most part. I mean, there's traders and stuff that obviously trade, buy and sell Bitcoin, but the sell part of this is when these coins were issued to the insiders, they've done nothing but sell. So let's think about something like XRP, where they had the launch of XRP They issued a bunch of tokens to their friends and insiders, and they've done nothing but sell those tokens to the market, to fools, essentially. They've never bought any XRP. It's not like Brad Garlinghouse is buying XRP on a regular basis. No, they're selling it and they're probably trading it for Bitcoin. Did you guys see the video of Charles Hodgkins the other day from ADA or Cardano? They're actually holding Bitcoin on their reserve of Cardano. So nobody buys these to hold on to them. They essentially were issued them and they dump them onto the market, or they're hoping that they can sell them one day for more Bitcoin. That's kind of like the whole game here. So Bitcoin's decentralized. As mentioned, there's a bunch of nodes. I think there's over 20,000 reachable nodes around the world now. It's decentralized. Those are the people who get to decide the direction of Bitcoin. Crypto is all centralized. And the next one here, it demonstrates a little further. Bitcoin has no CEO. There's no board of directors. There's no marketing team. It's all just people running nodes and running the software, Bitcoin Core or Bitcoin Knots. And so it's 100% decentralized all around the world, which means that, number one, if you want to arrest somebody, who would you arrest in Bitcoin? Who's the founder of Bitcoin? Who's the CEO? You can't cut the head off of Bitcoin. It's just a bunch of nodes across the world. Whereas with the cryptos, they're all companies. They have a board of directors. They have a marketing team. They have an HR team. Like, these are all companies. So if the government didn't like what XRP was doing or Ethereum, they could just go after the company itself and subpoena them, arrest them. You can chop off the head very easily of the cryptos, and that's a problem. Centralization is a problem. That's the world that we're moving away from. So that's an important part to understand as well, is the centralization. And a lot of these cryptos, they claim to be decentralized, but they're not decentralized at all. If you actually dive into it a little bit and say, what would make XRP decentralized? Have a look. And so what people call them is dinos, decentralized in name only. They aren't actually decentralized. They just claim to be for their marketing strategies. And fools, again, I'm going to keep going back to that because that's the only people who are buying these cryptocurrencies are fools. And I've been a fool before. I'm not immune to this. It's not like I woke up one day, bought Bitcoin, and never looked back. I started in crypto. You look back at my YouTube channel, I was talking about some cryptocurrencies. But you get to Bitcoin over time, and kind of the purpose of this video is to save you that time, to make sure that you don't have to make the mistakes that I made and that other Bitcoiners have made along the way, because you're going to see here in a second how costly those mistakes are. And you might think of it as, well, just a lottery ticket or a long shot, but it's costly over the long run. If you're holding these cryptos instead of Bitcoin, it's going to cost you a lot in opportunity. So Bitcoin has absolute scarcity. There's 21 million coins. That's what will ever exist. And some people might say, well, the nodes might decide to increase the supply of Bitcoin. But you have to always go back to the incentives here. Why would any Bitcoiner running a node vote to increase the supply and essentially devalue their wealth? They wouldn't. That's the answer. I answered it for you. With the cryptos, they're either unlimited, which means they can issue as many tokens as they want to and essentially devalue yours, very similar to the fiat system. Everything on this side, on the right side of this, the crypto side, it's basically how the fiat system works today. It's just tokenized versions of that. But so it's unlimited or it's fixed, as they say. And so you could look at some of these coins on like coin market cap or something like that. And they might say, well, there's a 1 billion token fixed supply. And that tricks a lot of people because it's fixed today, but that doesn't mean it's going to be fixed in 5 years from now or 10 years from now, because again, it's centralized, which means that the companies or the people who hold the majority of the tokens, they can actually decide to issue more or decrease the supply, whatever that is. It's fixed until it's not. Whereas Bitcoin is absolute scarcity. It will never change. And it's the only asset like that we've had in human history before. Gold was the second place, but gold has been dethroned by Bitcoin. So don't fall for the fixed supply, because that's just, Ethereum itself, if you look at the supply schedule of Ethereum, they've increased it, and then they decreased it significantly, and then they increased it more. They make changes to it. That's the whole point of what I'm saying here. It can be changed. If it's not decentralized, it can be changed. And speaking of that, immutable. So immutable means essentially once a block is mined within Bitcoin, and blocks just contain a bunch of transactions in those blocks, once it's put into the blockchain or the time chain, it's immutable. You can't go back and change it. And the reason for that is because every time there's a new block mined, that new ledger gets broadcast to every single person in the world running a node. And so if you wanted to make a change to it for some reason, you would actually have to go to every node in the network and ask them to make that change, which is not feasible. So that's what makes Bitcoin immutable. You can't change it. Once the transaction is put into a block and the block is mined, you cannot go back and change it. And the further it gets down the chain, the harder it would be to change because you'd have to change everything in front of that as well. Whereas with crypto, XRP in specific, I think the first 34,000 blocks of XRP is gone. Just vanished. Can't find the information there. How sketchy is that? And if you don't believe me, you can verify this stuff. Ask how many blocks are missing from the XRP blockchain. Look that up on Google, Perplexity, verify this information, but it actually happened. So the first, I think it was 25 or 35,000 blocks of XRP, information's all gone. That part of the ledger, a very key part of the ledger, is missing. And I guarantee if you asked XRP holders if they're aware of that, I'd say like 95% of them would have no idea that that's reality. So how do you build a token? How do you build a ledger and a network on top of something with a bunch of missing information? It's very similar to the fiat system in the sense that, you know, they tell us that there's $3 trillion in the monetary supply, but has anybody actually audited that before? Has anybody looked in to verify that that's actually accurate? It's the exact same thing with these cryptos. Whereas Bitcoin, it gets audited every 10 minutes. Every person running a node can verify every transaction that's happened since 2009. So the foundation of Bitcoin itself is very, very solid. And that's what makes it such a good store of value, which is our next point here. So a lot of people out there, they think, you know, Bitcoin's good. It was the first one. It has the biggest network, but it can't do this or it can't do that. And that's why I hold this crypto, because it has utility in this sense. So here's the thing. With Bitcoin, it's a savings account. You put your time and your energy, any profits that you made in the world, you put that into Bitcoin. It's a store of value. It's going to maintain its purchasing power. Whereas some of these cryptos, yes, they might have utility. Yes, you might be able to use them for something in 5 years from now, but they're not a good store of value. And you don't know which cryptos are going to be used in 5 or 10 years from now. So you're basically just gambling with it. That's what it is. It's a fiat version of mixed with gambling and degeneracy. So in that sense, you might say, well, I'm just going to store my time and my energy in Bitcoin. And then if I ever need some of these other tokens in the future, I don't know which ones are going to be used. And I'm guessing you don't either. So at that time, because I've stored my value in Bitcoin, I'm going to get some of these tokens for much cheaper in the future if I actually use them. But like, what good is XRP or Ethereum if nobody's actually using them? They claim to have utility, but for what? Just for creating more cryptos? That doesn't seem like a good utility to me. So I don't think that Bitcoin's going to be, in fact, I know Bitcoin's not going to be the only crypto around in a decade from now. But I mean, if you can pick the horses that are going to be there, but we're going to talk about this in the next part here, because you really have no idea. You might have success short term with one of these cryptos, but over the long term, the difference is that Bitcoin is a protocol. Like the internet, like email, it's a protocol. Versus cryptos, they're just a technology. They're the latest thing, the latest utility. And so, yes, again, you might see some returns over the short term with some of these cryptos if some magic happens in the markets. But over time, it's going to be replaced by the next thing, the next best utility. And we've seen this already. We've seen Ethereum become replaced by Solana. Solana is better than Ethereum in the utility sense. And so a lot of that market cap from Ethereum has moved into Solana. It's the better version of that. It's the blockbuster is now Ethereum. So all these different cryptos, even if they have short-term success, they are going to be replaced by the better version of that in a couple of years, because they're just technologies. They're not foundations. They're not protocols like Bitcoin is. So we talked about this one already. People buy Bitcoin and hold on to it. Crypto people, especially the insiders who are issued the tokens, they do nothing but sell them. They don't buy these tokens because they're not a store of value, and a lot of them have no utility. Bitcoin is a commodity. Cryptos are securities, unregistered for the most part. I'm guessing that with the new administration in the US, this is going to change a little bit, and there's going to be more clarity over what's what. But you want to hold a commodity, not a security, for a lot of different reasons. Bitcoin's a reserve asset. The US government, there's a bunch of governments around the world who are planning to hold Bitcoin or already do hold Bitcoin as a reserve asset. Crypto's not. A lot of crypto people got excited when the US announced that they were going to hold on to their digital assets for a while at least, but they're not buying any new stuff. It's the exact same thing as the founders here, this companies, the people who are issued these. They might hold on to them for a while, but they're never going to buy more. They're going to buy Bitcoin, or they're hoping that these go up so they can buy more Bitcoin. And so the moral of the story is, why not just buy Bitcoin? Because Bitcoin is going up forever. That's built into the code. It has a fixed and absolute scarce supply of it. And the demand of Bitcoin will go up forever. And it has a ton of utility, which is, I think, lost to most. But cryptos are going to zero eventually against Bitcoin. And that's an important thing to end with here for the first part, is that you might be waiting for your cryptos to go up to where you bought them from. Let's say you bought Ethereum a couple of years ago when it was $4,000. Now it's $3,000. And you're waiting for the fiat price to get back to even or above so you can cash out and buy Bitcoin. But while you're waiting for that, Bitcoin has gone from 50,000 to 75,000 to 100. And all you're doing, the longer you wait, is you're going to end up with less sats. If that's your goal, to trade some of these for Bitcoin later, all you're doing is losing the amount of sats. You think that you're going to be ahead somehow because you're waiting for the fiat price to get back, but that's different. Look at all of these cryptos against Bitcoin, not fiat. And all of them have just been going down and down and down and down, and they will continue to go down. They will go to zero against Bitcoin eventually, just a matter of time. So those are the differences. Take a screenshot of that. So let's go down. There's a person within the community here who was talking about their split between Bitcoin and other coins. And you might be thinking like, well, I don't want to put all my eggs in one basket like Bitcoin. I want to have some lottery tickets. I want to do a little bit of gambling because I don't really know enough. So I'm going to diversify in my digital asset strategy. And so you might say, well, I got Bitcoin, so either way, I'm probably going to be fine. But I'm going to show you the opportunity cost of holding 60% Bitcoin versus 100% Bitcoin over 20 years. So in this case, the fella said that he's holding 60% Bitcoin and 40% crypto. So we're going to say a $20,000 investment. I think for the average person, this might be high, but for other people, this might be low. But I figured this would be a good average to start with. So let's say you had $20,000. Either you're moving it from a different investment account or your retirement fund, or you sold a rental house, whatever that is. You got 20,000 bucks and you're looking to allocate it into digital assets. So right now you could get 20 million sats with that 20 you could get 20 million sats with $20,000 or 0.2 of a Bitcoin. And if you go the diversification route, you're going to end up with 12 million sats or 0.12 of a Bitcoin. And so you can see here the differences over time. So 20 million sats, this is the one that we want to focus on. This is where you should be. This is 100% in Bitcoin in terms of your digital assets, zero crypto in this portfolio. So this is based on a 50% compound annual growth rate. And you can look this up on, I think it's called kagercalculator.net. I will put this in the comments, show notes. Reverse Kager, kagercalculator.net, CAGR calculator.net. So let's look at this. So you can see over time here, your 20 million sats that you bought back in 2025 for $20,000 over 20 years at 50% compound annual growth rate, that's going to be worth $69 million worth of purchasing power in today's terms. Keep in mind, this isn't when a loaf of bread costs $20,000. This is in today's purchasing power terms. So 69 million over 20 years. Pretty good. But let's say you diversified back in 2025 and you bought some Dogecoin, you bought some XRP, you bought some Ethereum, you bought some Cardano because they were cheaper than Bitcoin. So that 12 million sats, you're going to do pretty good. But over 20 years, that's going to be worth $41 million. So that decision you made back in 2025 because you weren't listening to Jor or other Bitcoiners, that mistake, that allocation cost you $27 million worth. That's your opportunity cost. And I threw $8,000 in there for the XRP that you bought back in 2025. It might be worth the same. So I deducted that from your opportunity cost. So with that, you end up with $27.9 million opportunity cost by holding other cryptos instead of holding just Bitcoin. And imagine what this is going to be worth when you stretch it out to 30 years, 40 years, 50 years. And your family's going to say, why in the hell were you holding Solana? Why in the hell were you holding XRP? What planet were you living on? So that's the cost. It's not just a gamble. It's not just like, I'm going to put this in because I think diversification is important. And you know what? If it doesn't work out, then I go to zero. That's the wrong way to think about this. You need to be thinking about the opportunity cost of holding these other cryptos for the long term instead of storing it all in Bitcoin. So I hope that makes sense. The last video that I did, I only had about 3 things to compare, but I think this is a pretty good list. And when you're talking to friends and family about this, you can use this list and maybe you can expand on some of these things in your own words. But I think that this is important for people to understand that just because Bitcoin's worth $105,000, the goal here is not to buy one Bitcoin. The people who own one Bitcoin in 20 years from now, you could probably fit them in one town. Like, that's not what people should be striving for here. I mean, it's a great goal, but don't think just because you can't get to one Bitcoin that you shouldn't hold any Bitcoin and you should start looking at these other shit coins. So again, over the long run, and if you think about it in terms of sats, you can get 1,000 sats for $1 today. 1,000 sats. And sats are what we're going to be paying for things with in the future. No one's going to know what the price of Bitcoin is in a decade or two from now. We're going to know what the price of sats is. And one day it's going to cost 1 cent for 1 sat. And then it's going to cost $1 for 1 sat. And today you can buy 1,000 sats for 1 fiat dollar. And the reason for that is because most people haven't figured this out. Most people haven't put in the time to learn and study and understand Bitcoin. And so they see it as too expensive, whereas they should be looking at this as the greatest opportunity in human history in Bitcoin, not crypto, not blockchain, not anything else. You buy Bitcoin, you take self-custody of that Bitcoin, and you protect that Bitcoin. That's all that you need to do. You don't have to look at charts. You don't have to worry about trading. You don't have to look at the price being up or down. You just buy Bitcoin. Any money you have left over from your job or your business, put that into Bitcoin. That's it. It's the easiest thing ever, but it's also very hard to do because it's so simple. So that's what I got for you today. I hope you enjoyed that one. And if you say that Bitcoin doesn't have any utility, you can actually use this QR code here and send some sats to the channel if you'd like to. That's a pretty good use case, I would say. The fact that you can send value to anybody else on the planet without anybody's permission, I'd say that's a pretty good use case or utility for Bitcoin. So that's it. Thank you for watching. Hope you enjoyed this. Send this to your friends and family who are still holding XRP, and we'll talk to you on the next one. Bye-bye.